Good morning once again.
Good morning, sir.
Yes. So first and foremost, as the topic that I would be discussing is more of the direct laws, direct taxes, or direct tax laws as an international taxation. Now, if you see, the first and foremost in the direct taxes, the topic that I would be dealing today is more about the tax planning, tax avoidance, and tax evasion. You might have heard these words. Because see, you have already dealt with your direct taxes in your inter, where you might have read the 5 heads of incomes, the salaries, house property, business, PGBP and the other sources. So capital gains and the other sources. So if you have seen, like you have read what are the laws that we will have to comply. Now let's try to understand the difference, 3 concepts: tax planning, tax evasion. Now what do you mean by tax planning?
So using rules and regulations, reducing tax liability.
Perfect. So if you understand all the rules that you have learned, all the rules and regulations to comply with the laws and comply in the spirit of the law. Let's suppose I earn 50 lakhs per annum. Okay, assume. So when I am earning 50 lakhs per annum, so what are the things that I can do at the so that I am benefited, at the same time tax burden is reduced. For example, ATC, all the deduction that you have already dealt with. Okay, that can be with regard to, let's suppose I take some insurance policies, I take some health insurance policy, I give certain donations. Let's suppose I purchase a house on loan. Okay, I get a deduction. Okay, of around 2 lakhs per annum. Okay, which if I am planning and trying to I am trying to comply with the laws, at the same time planning it in such a way where my tax liability is reduced in the spirit of the law, because tax laws is a law. Okay, taxation is a law which has come in the year, which year? 1961. So following the law in the spirit of the law as per what they intended. Okay, and trying to comply with all the rules and regulations and accordingly minimizing my tax burden. Yes, this is more about, let's suppose, as I said, I have 50 lakhs. Okay, out of 50 lakhs, we know there are certain slabs above which I will have to end up paying 10%, 20%, 30%. So while doing this, I get certain exemption of 1.5 lakh, health insurance. Then if there are some, if I am giving certain donations, okay, the home loans, if at all, if I am taking a home loan, I get a deduction of how much is it? 2 lakhs. Let's suppose I have another PGBP. Can I set off this? Can I carry forward this? There are ways in which I can plan them and accordingly trying to reduce my tax burden and as well as complying with the laws. This is more of tax planning. Tax evasion is not paying tax. Yes. Yes. I'll tell you what. The major role that a CA plays is, understand, if a particular person comes to you, okay, and says, boss, I have an income of 1 crore. How do I reduce my tax? Example. So you tell him exactly the same way, give him a tax planning. He may not show much interest, but in case if you give him, if you do this, the tax liability can be reduced. Okay, previously you were supposed to pay around 30 lakhs, now you pay only around 18 lakhs, 20 lakhs. He is interested. Yes. So, but doing this, there are ways where the tax consultant, I would not say a CA, there are ways, the entrepreneurs are being misled. Example, let's suppose I have a sales, okay, I am increasing the expenditure, I have a profit, okay, I am creating a dummy expenditure, okay, understand, I don't give salaries to persons, okay, but I say I have 50 employees to whom I pay every month 10,000 rupees. So what is happening? Every month 5 lakh has been given spent as an expenditure, right? So if I am hiking the expenditure, okay, or trying to suppress the facts, or trying to avoid, so that what is happening is I am trying to evade or escape from paying the taxes. This is tax evasion. Now what is tax avoidance? What is tax avoidance?
Similar to tax planning, but there in tax planning we reduce the liability, here we avoid payment of taxes.
Yes, more of, right? If you see, What exactly tax avoidance is? Something playing in between them, playing in between the tax planning and tax evasion. Okay, playing something in between them. For example, let's suppose Dubai. Okay, the tax rate is 9%. Okay, India, assume tax rate to be 25%. Yes. Now what I do is, let's suppose I sell produce from here to India. Okay, let's suppose I sell them, let's suppose 1 crore worth of produce I sell it to India. But whereas I am billing them at 5 CR. I am billing them at what cost? But whereas actual cost is around 1 CR. Okay, I am billing them at how much? 5 CR. And 5 CR is been paid by this Indian company to Dubai company at 9%. Now what was supposed to happen generally, if you look at my balance sheet, okay, or the profit and loss account, previously the purchases mein how much was supposed to be? 1 crore. Okay, by sales, so I had a profit of 4 crores where if I am paying, I will end up paying around how much? 25% is how much? 1 crore as a tax. Yes. But where rather what am I doing? I am booking the higher expenditure. Okay. What am I doing? I am here keeping the purchases as 4 crores and reducing my profit. Okay, and paying a lesser profit over here, lesser taxes over here, and यहाँ पे भी taxes है, but how much tax would I pay? 9%. See, I am just giving you an example. Okay, again to curb this there are many things like transfer pricing. You might have heard transfer pricing. Even if no, not a worry, we would be learning in over the classes. So transfer pricing, things like GAR. Okay, so anti-avoidance ruling. So general anti-avoidance ruling. So there are many things to curb those practices. So this is one of the thing where if you see they are trying to avoid the taxes. Okay, so that is called as tax avoidance. Okay, or what they do is actually they try to escape the tax by playing in between the lines. When they start playing in between the lines, what happens is they end up paying. If you remember, if you understand, there was one famous case of the Vodafone also. What happened in the Vodafone? If you see, there was one company in India. Let's assume A in India. I am not taking the exact names. So there is a company in India. Okay, this has a holding company in one more country. Okay, let's assume this is to be India. This is a foreign country one. Okay, so this company is a holding company, this company is a subsidiary company. We know what is holding, what is subsidiary. Yes, understand, this company also has one more holding company. Okay, this is the ultimate holding company, or I will take it as here up. Okay, this is the ultimate holding company. Okay, now if you see, F2 is the C is the ultimate holding company, B is the holding company, and A is the subsidiary company, which is located in India. Now what happened is, somebody wanted to acquire this. Let's suppose P, a company, want to acquire this company A, that is take over this company. Okay, when they wanted to take over this company, what happens? Understand, we know that taxation rules are based on what? Taxation rules are based on the what is it based on? Residential status, source of income. Residential status, source of income. Of which if you see only this company is an Indian company, rest of all three are foreign companies. Okay. Now if you see, if the shares of this company is bought by this company, the source is generated where? Yes. So what happens? The source is in India, so you will end up paying taxes in India. Yes. So they actually want, if they are acquiring this, they're buying this, they will have to pay taxes. That is, if they are buying shares from them. So how do they acquire this company? They will go buy shares from B. Okay. When they go buy shares from B, source is created where? In India. When the source is in India, they will have to pay taxes in India. Yes or no? They wanted to avoid this. So what did they do is, they did not go buy and acquire this company. They have went to them and they have acquired this company. Understanding the difference? So what did they do? They have gone to C and said, boss, we would like to buy this company. We would like to come buy company B. So that what happens? They are not acquiring this Indian company. They are acquiring company B, which is a foreign company which was in tax haven country. What does that mean? No taxes or reduced percentage of taxes. Okay. Now what has happened? They did not even pay a single rupee as a tax. Because if you understand, is this a tax avoidance or no? Yes, because generally here in case if they have bought, they would have paid around at least 40-50,000 crores to India as a tax. But what did they do? They have alternatively become a holding company here. So this company is no more a holding company. This company will become holding company. So this company will become ultimate holding company to this. And indirectly they are holding this company. Getting it? Understanding the difference? Yes. So these are, there are many ways in which people are trying to play in between the rules so that the tax burden is reduced, and this concept is called as what? Tax avoidance. Now if you see what happened in this case, what happened is, if you understand, the government of India has understood that this is how the concepts are going. So what did they do? One of the assessing officer has sent a notice saying, boss, what did you do? You have bought shares. You are supposed, see, this company does not have anything. Only thing that they have is what? The shares of this company. Okay. And what was your intention of buying those shares? So that you become a holding company here, and you have bought those shares. Why did you buy those shares? Only to become the holding company of this company. So what did the assessing officer do? Is has sent a notice to him saying, boss, you have avoided the tax, so you will have to pay taxes karke. And he has given an order saying that you will have to end up paying 41,000 crore tax. How much? 41,000 crores taxes. This is a case of Vodafone. Okay. Now what has happened? Accordingly, again they have gone to the High Court, the Vodafone. What happened in this case? When they have gone to the High Court, they have lost the case. The High Court has given the judgment in favor of the income tax authorities. The next moment, what did they do? They have gone to the Supreme Courts. When they have gone to the Supreme Court has given the judgment in favor of the Vodafone. Because why these things differ, if you understand, is based upon the interpretations of the concerned judges. And the Supreme Court has clearly said, was here we are not here to understand how the laws has to be worked. We are here only to interpret the laws. And whatever it is, whatever you have written, we have interpreted and accordingly has given the judgment. And in case if you have any issue, what you do? You go to change the laws, but do not come and fight with us. Yes. Then accordingly, what happened in 2011? They have actually went and changed the laws. Changed the laws, saying was, in case if you want to, if the source is to buy the shares of the Indian company, okay, then that is what does that mean? In this particular balance sheet, okay, in this particular balance sheet, if they play a crucial role, if the shares of this company, then it is considered as acquiring the shares of Indian company, and they will have to end up paying the taxes. The law was the law was accordingly modified, and the law was modified with a retrospective effect. What do you mean by retrospective? Coming from behind. And retrospective effect was, they have given the effect from 1961. And when did they do it? In 2011. And if you understand, because of which there was a huge impact on the industry. Now according to that, what happens? Vodafone has to pay the taxes. Again, accordingly, they have went to an international court. This Vodafone has went to an international court which is situated in Netherlands. So they have gone there. Again, there also the Vodafone only won the case. They said, was you cannot play with because when you have made the laws, this was not there. Okay, accordingly you cannot come back and say you are changing it from the retrospective effect and give an effect to these persons. So accordingly, what happened recently in 2021, they have modified it and they said this effect is retrospective from 2012, and Vodafone has escaped from paying these taxes. So this is one of the tax avoidance concept where huge amount of tax was avoided. So if you understand, this is playing somewhere in between tax planning and tax evasion, so that you are complying with the laws, at the same time you are trying to, but however, considering this tax avoidance agreement, there were many things that were brought into existence. As I said, transfer pricing, because if you understand, Dubai was previously not that developed, but if you have seen these days, this is developed a lot. Why? What is the difference? Because the tax rates are comparatively lesser over there. So it is attracting companies from different countries to come there and invest. Okay. Now what is happening? Because the main purpose is it's only 9%. There are many tax haven countries where the tax percentage is very less or no tax also. So what is happening there? Because of this, if you understand, the companies are trying to have a holding company there. Okay, holding company there and bill as much as less possible to the other countries and have a higher rate of profits. There individuals do not have profits. Individuals do not have the taxes. Okay, so what is happening? Because of which they are trying to avoid the taxes. But however, to overcome this, to curb such practices, what did they do? The concept of transfer pricing has come into existence. So according to the transfer pricing, in this given example only, if you see the first example where we have discussed, they said nothing doing was you will consider this as 1 crore only, and you will end up paying taxes in India. Because in case if you want to do such thing, in case if it is a genuine transaction, you will have to show that this is at arm's length price. What do you mean by arm's length price? Exactly. It is more of a fair price. What does that mean? If you understand, let's suppose if I go sell to a person to whom I don't know, in an unknown market, to a person who is a stranger, at what price I sell, the same price if I am selling here, I will have to project it. So again, there are ways in which you will know how to calculate it. Arm's length price. There are ways. Okay, cost plus method, comparative method. There are ways. There are almost 5 methods which we will learn eventually. So based on which it will be decided whether it is at arm's length price or not. Accordingly, it will be decided. Or you have anti-avoidance rules, general anti-avoidance ruling. So in case if the department gets to know, boss, you might have known the corporate will concept in law. What is corporate will? In case if you are going against the intention of the law, then what happens? They will lift that will and say the directors and the company are both the same. The directors of the company will be held personally liable. Same way, in case if the department understands that you are going against the laws, okay, what do? They avoid that particular thing and try to make the laws the taxes applicable on that particular person. Okay, there is also BEPS. Okay, so what happens in this? They will try to, the MNCs which whatever are there, what do? They do not have a, just like if you see Google, okay, or Facebook have an office in India, generally speaking. So previously, I am saying previously they don't have an office in India, they are located somewhere in tax haven countries. Okay, they are earning a lot of money because we are using it. Okay, do they pay taxes here? No. What is happening here? Base is getting eroded and profits are getting shifted. BEPS is nothing but base erosion, profit shifting. So profits are, what is happening here? The profits, whatever the country that was supposed to be paid here, this is getting paid in that country where there are no taxes or the tax rates are very less. Getting it? So because of which what happens? The countries are getting affected, and at the same time there are other concepts like double taxation treaties. Okay, so where you get to know, like at the same time we are not avoiding, we don't want the tax to be avoided, but at the same time we don't want the person to pay double taxes also. So there are double taxation treaties where in case, let's suppose if a player comes from Australia, Maxwell comes to India, play IPL, he is paying, should he pay taxes here or there or both the places? Yes, for the Indian chores he will have to pay here. There when he goes there, let's suppose here the percentage is 30, there the percentage is 40. He will pay the balance 10% over there. Understanding the difference. So he only for the Indian source. For the foreign source he will pay it there only. And even if I am going out of India, okay, let's suppose I go to UK, I teach for ACCA. So I go to UK and teach there and come back. Okay, when I am paid there. Okay, if I am a resident and ordinary resident will have to pay for all the sources that are earned all over the world, okay, in India. Let's suppose there I have earned, let's suppose 2 crore rupees. Here I am earning 1 crore rupees. So the total income is 3 crore. There I have already paid 30%. Do I have to still pay in India? No, not necessarily, because of the double taxation treaty. Okay, so accordingly you have treaties which will actually help the main purpose is to collect the taxes, but at the same time not to overburden him, but at the same time the department would also like to see that the tax is not avoided or evaded. Yes? Any questions? So this is more about the tax planning, tax avoidance and tax evasion. Yeah. You have understand this is just a base demo class, so which I wanted, I didn't wanted to get into in detail. Yes. So in case if you have any questions, queries, you can just ask me in this.
So the difference in the tax rate, suppose in India we pay 25% and suppose Australia we have to pay 40%. So with those nations we both have an agreement that the allocation of money is in this way, or so they have to, because they have to show the document that they pay 30% of the tax.
You will have to provide all the documents. Let's suppose if I am paying here 25%, in Australia let's suppose it is to be 40%. So where I have paid 25%, I will have to provide the documents there and accordingly pay the balance 15% on the source that I have earned in India.
Australia is losing its revenue also because it is paying.
See, in case let's suppose if I go to Australia and I earn there, I pay 40% there. Understand, it is that's the reason we call it as a treaty. Win-win situation to encourage this, the international relationship between the countries. Yes. Any other questions? No? In case no other questions, we'll stop the session for the day. Signing off. Thank you one and all. Vikram.